Hello, my name is Rob Newman. I am the tax director of Carter, Collins and Meyer in Rochdale. And if you're watching this, you're watching a short video about the reverse charge for construction industry, which starts on Monday, the 1st of March 2021. One of my colleagues actually explained the reverse charge to me as I was struggling to grasp it fully. And she summarized it fantastically in one sentence, which I'm going to say to you if you're watching this. It's a construction industry scheme. Yep, it's CIS for VAT. It's as simple as that. Just as the way CIS works, and if you're old enough, you'll remember the old SC60 vouchers where you'd actually get a piece of paper that you could cash in for cash. It's not an oxymoron. This works very, very similar. A percentage of your turnover is retained by the person to whom you are selling. They pass that onwards to HMRC, but you get credit for that when you're calculating your VAT return. End of issue. Now, you could turn off the video there, but I'm going to do a bit more. I'm going to talk through how it works on the scheme, things, what you physically need to do, how your VAT return will look, and places to go to get further information. The best contact at CCM if you are struggling with for VAT for construction industry is not me. Although I'm making this video, I have been very much guided and helped by Catherine. That's catherine.day@uk-ccm.com. And I can picture her face as I say that because she will be delighted that I'm passing you on to her. Please do contact Catherine, catherine.day@uk-ccm.com regarding the reverse charge for VAT. She is far more knowledgeable than I am. Without further ado, however, I will share the benefit of my shallow knowledge with you now. I'm going to share the screen. We've got some slides. I aim to keep this as short as possible, but I've not actually done the presentation before and not sure how long it will last. Here we go. So share screen, he says somewhere. Reverse charge for VAT, Carter, Collins and Meyer. So to tackle VAT fraud in construction industry, a domestic reverse charge will be introduced on the 1st of March 2021. I explain what this means for your business. What is the reverse charge? The reverse charge is a mechanism for accounting whereby the customer charges themselves VAT rather than the supplier charging VAT. The domestic reverse charge is commonly used to prevent missing trader fraud, i.e. the supplier will charge VAT against charge VAT to be paid, and the VAT is paid over to HMRC before it goes missing so that there's no missing trader fraud. As the reverse charge makes it the customer's responsibility to account for VAT, there is no opportunity for the supplier to disappear without paying the VAT to HMRC. As I said at the beginning, just like CIS, the way CIS works is a percentage of your income is deducted and handed over so that you can't disappear. This works very, very similar. What does it mean? Well, it means you no longer charge VAT to your customers, and those suppliers you have who fall into this will no longer be charging you VAT. You will need to review your contracts with your customers and suppliers to see whether they are impacted by the reverse charge. I'm going to give some of the criteria as to who is and is not impacted by the reverse charge on this. All of these slides, notes, handouts, etc. are all downloadable from our YouTube site. Our YouTube site being, go to YouTube, type Carter, Collins and Meyer. And there's loads of videos on there giving short, quick and dirty tips and long, dirty tips for saving tax and improving and developing your business. So how does this work in practice? If you are supplying a service that meets all of the criteria for the reverse charge, and you will no longer charge VAT to your suppliers, or sorry, to your customers even, you will need to validate that they are VAT and CIS registered and not an end user. If they are an end user, a domestic householder like myself sitting at home at the moment, you would still charge VAT as you always have done. This is only selling to those who are themselves CIS contractors. If you use software to account for VAT and generate invoices, you may your tax codes. If you use software, I have put some links afterwards to the two main softwares that we propose you use. The one that we often also recommend is QuickFile. That has only just dawned on me. I will check with Catherine as to what they have in place for this. If you do use that, please do contact her, let her know. I'm sure she will be delighted to help you. The sale should be reported in box 6 on your VAT return, but not in box 1. Towards the end, I put an example of how the VAT return will look. Invoices should make clear and include wording that the domestic reverse charge applies and that the customer is required to account for the VAT. Although you put that clearly on the invoice, you don't actually put VAT. The invoice should also state how much VAT is due under the reverse charge or the rate of VAT. I think it's probably easier to have the rate. That way you can have a very standardized box. And certainly the example I have, I believe, has the rate. The amount of VAT should be included. It should not be included. It even should not be included in the amount you charge to the customer. If you're receiving a service that meets all of the criteria for the reverse charge, in other words, you are a CIS contractor and you have subcontractors who work for you who also fall under CIS and the reverse charge, you are VAT registered. Obviously, that's useful. And you are not an end user. You're not a domestic user. You're not a company that is not within this schemes. You won't be charged VAT by your supplier, but you will need to charge yourself the VAT and pay it over to HMRC in box 1, reclaimable in box 4, subject to the normal rules. The net value should be reported in box 7. If you use software, you may have to change the tax code again. So to repeat that, you will need to charge yourself VAT so that the VAT due will be paid to HMRC in box 1 and reclaimed in box 4. The net value should be reported in 7, and you will probably have to change your software. What construction transactions does the domestic reverse charge cover? Well, the domestic reverse charge will only apply to supplies of building and construction services that are subject to VAT at the standard or reduced rates that fall within CIS. These are called specified supplies. HMRC have prepared a flowchart which is here. That is the link to where this original one is. So the very first question is, does the supply fall within the scope of CIS? If it does, normal VAT. If it doesn't, normal VAT rules apply. If it does, is the supply standard rated? If it is your customer VAT registered? If they are, is your customer registered for CIS? If they are, has your customer confirmed that whether or not it is an end user? If they're not, domestic reverse charges apply. So, is the whole thing within CIS? Is the supply reduced rate rated? VAT registered? Is the customer registered for CIS? Is the customer an end user? If so, the reverse charge applies. Well worth downloading this, printing this page out, making that bit bigger on a photocopier or something, and having it available, or downloading from the address here in the bottom right-hand corner. If you follow that on the download of this, it'll take you straight to the page. Laminate that, stick that on the wall, and ask yourself as you go through, maybe even annotating it if you're using software with the tax codes that you need to do. certainly in old Sage, you'd have T0, T1, T2, T3, etc. I believe there's now about 50 T codes for VAT on Sage. Fortunately, it's not something I do personally directly very often, I'm delighted to say. So moving on, what are specified construction services? You probably know this better than me. Specified construction services: constructing, altering, repairing, extending, demolishing, dismantling buildings or structures, whether including offshore. Constructing, altering, repairing, extending, demolishing of any works formed or planned to be formed part of the land, including walls, road, etc. You get the idea. That slide there. Please do check it. I'm not going to read it all out at you. I don't see any huge benefit for that. Much better to actually see it, read it, download these notes, think about it, and does it apply to you? Having looked first at the flowchart on the previous page to see whether the transaction falls within CIS, whether everybody is VAT registered in the chain, and whether or not they are an end user. What suppliers are excluded? Again, long list of it for you. Again, I would suggest simply download these slides, keep this pack, look at that and see whether you fall into it. You're going to know fairly quickly once you've compared against that whether you are or you aren't. If you fall between the gaps, please do contact catherine.day@uk-ccm.com. She will help research if you sit somewhere between these and think that you may or may not be included. But worth having a look at those. When will the domestic reverse charge start? That's the 1st of March, which I believe is Monday. I hope I didn't make a mess of that when I said Monday. 1st of March is certainly very soon. Let me check on the diary. Yep, Monday. So you haven't got long to do this. We have put out a few previous things about this, but I thought it was easier to probably have a video quickly put out. How should contractors prepare for this change? Businesses that supply or receive construction services need to understand how they're going to be impacted by this change. The first thing to do is look at that flow chart. If the majority of your work or a substantial proportion of your work falls within the domestic reverse charge, you should identify instances where you make supplies other than to businesses in the construction sector, or are receiving them and selling them on so that you are not the end user. If you operate in this way, you will need to think those services with the appropriate tax treatment that you are going to be subject to the reverse charge for. It means that you are likely to have a short-term cash flow effect. Think about it. If you previously did a job for £1,000, you would have sent out an invoice for £1,000 plus VAT. That's 1,200 quid. That would have meant that you, assuming they paid you pretty quickly, you would have received 1,200 quid into your bank account. And 3 months later, you would have owed out the 200. You essentially, therefore, had a short-term loan from the government, interest-free, of that £200. That will disappear. You do a job for £1,000 and it falls within the reverse charge, you're going to get £1,000. Again, assuming they pay quickly. That's 200 quid less than you have previously done. Now, you don't have any debt. You're not facing a bill in 3 months' time. But in the short term, you do have less money coming into the bank. It was never your money, but it's less money. Practically, what we are believing is going to happen is you're probably going to end up with refunds all the time, which takes me, which is the last part of this. The refunds all the time, because you don't just sell stuff, you're buying stuff as well. So if historically you had bought 500 quid's worth of stuff plus VAT, your VAT return would have been £200 of sales output tax, £100 of input tax, net due to HMRC, 100 quid in 3 months down the line. Now, 3 months down the line, output tax 0, input tax £100, you're now into refunds. You're getting cash back, but in 3 months' time. So the use of that 100 quid that you historically had, overall, you're no better or worse off. This isn't doing anything to the cost. But short term, particularly for the first quarter, you're going to have a cash flow change. Now, if you are running into cash flow difficulties, please do contact Andy Barker or myself. We can put you in touch with appropriate finance providers to get you through this. One thing to though think about is what I put at the bottom of this slide. You may wish to move to monthly VAT returns, because rather than accumulating 3 months worth of transactions like I've just described, you might want to just have 1 month's worth and get that 100 quid back in 4 weeks as opposed to 12. If you are suffering any cash flow difficulties because of the change of this, that would significantly improve them. The trouble with that is you are going to have to keep better records. You're going to have to get them to us quicker, and we are going to charge you more. Catherine can talk you through costs and records and timelines and all the things that are necessary, but it may well be worth doing, particularly in mind of knowing that in 2023, the way the whole tax system is changing, or the way the whole tax system is run, is changing significantly, and you're probably going to have to do all of that anyway under that regime. So it might be worth trying to get the practice in now and manage your cash flow accordingly. So in summary, sales, end user. If you're selling to an end user who is not in the construction industry, the VAT is normal. If you're selling to an end user who is within the construction industry scheme themselves or is already a contractor, you do need to check HMRC's flowchart, which I've included in here, and determine whether or not that you have to apply the reverse charge. Purchases, invoices received, show the reverse charge amount, add the amount to output and input tax. Practically, here's an example of how you are going to have to lay out an invoice. So you've got the invoice number as you historically have always had, the details of who it's to, the job description, the date, the terms, description of the work and the cost, it's £1,000, and then a very clear statement, VAT clause, reverse charge VAT Act 1994, section 5A applies, 200 quid. No amount of VAT to be included in the total of the invoice, but clearly stated at what rate you are charging it. Rather than £200, I think I'd probably put 20%. Reverse charge VAT Act 1994, section S5A applies, 20%. I'd probably put, or 5% if you're a reduced rate. That clause showing the amount of VAT reverse charge as done. Details of it. So that's how you're going to have to physically have invoices. If you raise these on software, the major software providers have already built this into it. No doubt they will charge you for the upgrade. If you don't raise this on software, that is how you're going to have to physically handwrite it if you are caught within this. Basically, if you're a CIS contractor, you're going to be caught within this, and VAT registered. And finally, this is how your VAT return itself would actually practically look on the same thing. You've made £1,000 worth of sales, but you've got no output VAT to account for in box 1 because your customer has already accounted for it, but you do have sales value to include in box 6 of £1,000. Again, if we file these for you under MTD, we will take care of this. If we don't file these for you, now may be the time you decide to move, particularly with all of the other changes. Please do speak with Catherine. She can quote fees and make sure that useful links, our own webpage. Catherine has written a fairly substantial article about this and how it actually works. HMRC's own webpage has some great guidance, and then Sage and Xero have written some very usable stuff on there as well. Again, these links are click through and can be downloaded from the download guide that comes with this short video. If you do want any help further, 0161706860255, inquiries at uk-ccm.com, or VAT at uk-ccm.com, or catherine.day at uk-ccm.com. And that is probably me for today. Thank you very much. I will see you again in the next video.